As the Russian-Ukraine crisis unfolds, naturally investors are going to be concerned about the stocks in their portfolio. Joining me from the floor of the CME Group is Knuckman of Trading Advantage. And Alan, you say it always comes back to commodities because despite what a stock might see on its charts or what you believe fundamentally, you get a move in that underlying and that can wipe out your entire investment thesis. So let's kick it off and take a look at wheat, because if wheat moves, guess what, consumers? That's going to get passed on to you.
Well, we've seen the wheat market and the grain market in general been in a long, depressed, downward trend fashion. So we're seeing this catalyst possibly to give this market a bounce. We bottomed out in January in the wheat market about 550. It had come down from about 725 or so. So the midpoint resistance was 640. We got up to 644 yesterday. So it'll be important to see how we can push through this level and get above that 50% retracement in the next coming weeks. I'm looking in the big picture. Wheat's gone down from 950 down to 550. So in the last 5 years. So 750 is the near-term target on the upside. Looking at this with an option play, a July 650 call, which is just a little bit out of the money. It's going to cost about $1,500, has 3.5 months of time to see if we can get some follow through and this overall downtrend does get broken, and there's upside possibilities. There's a lot of issues here in America as well because we've got a lot of snow cover. That's usually good for crops and good for grains, but we're going to see a lot of melting that should make it interesting for the season ahead.
And, another underlying commodity that's getting a move from the brittle temperatures that we've seen in the United States, and of course because of escalations in Eastern Europe, is natural gas.
Right, natural gas, the Ukraine is an important point geographically for natural gas distribution. Now, that doesn't have a direct impact here. We're kind of self-sustaining when it comes to gas here in America, but we've seen the gas market hold steady after some recent rallies because of, again, we were at all-time forever lows down at $2 just a couple years ago, so it's recovering from that, but also because of the weather. It could be a weather issue in the summertime because of electricity that's been converted over to natural gas as well. Looking at nat gas, looking at the UNG ETF is the way to play it. It's been trading between 17 and 20 for 5 months, broke out above 20, that targeted 23. Then in February, we got a little bit of a break. It went from 27.5 down to 22.5, a $5 move. So my measured move target is 32.5, that $5 move on top of the highs if we get a full V recovery. So looking at that, you can buy a 20 call, which leans on that previous breakout level, which is now support. A 20 call for January is going to cost about $6. It's $5.50 in the money, so it's a stock substitution strategy. Your break even 50 cents higher, and you've got 300 and some days for good things to happen as natural gas is in an overall uptrend after making this long-term bottom.
And this is exactly why it all comes back to commodities. Thank you very much, Alan. For The Street in New York, I'm Jill Malandrino.